Hi guys, Kar Yong here, and welcome to another video. Right, in this video, it's actually inspired I'm inspired to do this video because one of our traders in our community actually asked me what is my opinion on the US dollar. Okay, and I thought it's also very apt timing to do a video like this to share with you exactly my personal perspective and what the US dollar is about. Because right now we do have the election, and I believe some of you who are trading the currency market might also be concerned as to what's next for the US dollar. Okay. Now, before we go into that, I want to at least give you an understanding of this currency here, because this is not your typical currency, right? We are talking about the US dollar, or usually refer to the dollar or the DXY, okay, the dollar index. This currency here is so far right now our global reserve currency. Okay, so it is not your typical currencies like Malaysia ringgit, Singapore dollar, or even let's say the pound, Japan, etc. Right? The US dollar has its own unique characteristic, and this is something that perhaps through this video you'll be able to gain a better insights to it. Okay, now one common misconception that many traders, when they come into this market, when they trade the currency market, they always have the misconception, or perhaps they are still not aware, is that they always have a very fixated view of how the market is moving. Okay, so for example, what do I mean by that, right? For example, you would say, okay, the chart tells me there's a high chance it's coming down, and therefore your view on the dollar is bearish. Okay. Or if today you're looking at a fundamental perspective and you say, okay, the Fed is cutting interest rate and therefore the dollar is bearish. Okay, so you realize that you would have a statement because of some observation and you have a conclusion. Okay, now it's okay to oversimplify the entire equation into a cause and effect thing. Okay, so one particular cause, for example, the Fed reduce interest rate, that's the cause, and then the effect is the dollar weakens. Okay, that's an oversimplified understanding of the entire financial market, but it's also important at the same time and understand why most traders are doing that, because if you don't simplify things, then you will be in a state where you're paralyzed, you're not knowing what to do. Okay, but if you really want to understand this entire financial market, you need to go beyond that. Okay, so over here I want you to see, right, that the dollar, okay, so in short I put DXY or the dollar, right, okay, is a unique currency. Okay, maybe other form of currency you can most of the time kind of like put your analysis in such simple format. Okay, but the dollar here is unique because in today's world, okay, everything that you are trading with globally, okay, when we're talking about trading, we are not only referring to us as traders, investors, we are talking about business trade as well. Okay, you are still using the dollar. Okay, for example, today you are actually buying something from the US. Okay, you are using the dollar. Today you are trading the commodities as a form of business as well, right? Maybe is it oil, is wheat, is sugar, any particular commodities. It's also most of the time priced in the dollar. Okay, today if you are looking at the stock market, you are also looking at the dollar. Okay, and of course if you are looking at the currency specifically exchange, most of the time you are also trading against dollars. Okay, so statistically, it's somewhere around like 70 to 80% of the global trade revolves around the US dollar. So it has a very unique characteristics by itself. Okay, but of course at the same time, you have your fundamental forces in play. Okay, so that's going to affect your dollar. For example, whether the Fed is going to increase rate, what's the monetary policy? Is it tightening? Is it easing policy? That is going to affect it. Okay, but at the same time, I want you to see that there's also demand and supply affecting this, right? How many traders, how many businesses, how many banks would want to hold the dollar? That's demand and supply. Okay, and of course, you also have your macro perspective, right? Macro liquidity. Okay, so this one talks about like Fed as well, globally, the whole economy, how is it doing? Okay, and there are many factors, right? Including, let's say, the sentiment. Okay, if you take a look at the most recent global financial crisis in 2008, of course 2020 as well, that is what we call sentiment: fear, uncertainty versus greed. Okay, how is it going to affect the dollar? There's certain impact as well, because why? This is still the global currency. Okay, and this factor here is also playing out very importantly. Okay, to give you an illustration of what I meant, right? We always share this with our traders as well. Okay, so now assume that right now you're in this room with a table, and then on this table here we have multiple different assets. Okay, you have gold bar, you have silver bar, you have the US dollar, you have maybe some Malaysia ringgit, Singapore dollar, Thai baht, Vietnam dong, you know, etc. All other different assets, right? And then suddenly there's a fire alarm, okay, and you need to run, you need to escape, right? You need to get out of the room. On this table here, you can only quickly decide and choose one and grab and go. Okay, natural instinct. Okay, most of the people would say grab the dollar and run. Okay, some of you would probably say let's grab the gold bar. Then you realize that it's heavy, right? You can't run. Okay, so most of the people, natural reaction is they were gonna grab the dollar and they're gonna run. Okay, why? Is because dollar right now still has that perceived value or the perceived perception that it's still the global currency. Okay, today if you take dollar to anywhere, most of the countries would still want it. Okay, so that's the idea behind it, right? So there are many factors. Okay, I want you to see that. Okay, and this is important because if today you really want to understand what can affect a particular instrument or financial asset, it's never going to be just one factor. Okay. That's why when we trade, when we invest, it's always, you realize, right? It's always multiple factor of analysis that we put together. And as an individual, of course, you might have different significance or weightage that you give to each of this analysis. But from an understanding point of view, for you to understand what this is, what moves the financial market, you cannot take a very simplified way and say that, okay, if this happened, therefore the dollar will move. Because over here, it can be, for example, the fundamental is showing bearish sign, but the demand and supply, you know, is showing maybe a sign of healthiness. Okay, people want the dollar, and maybe from the sentiment point of view is also showing sign of positive. People want the dollar. Okay, so from this point of view, you realize that okay, while fundamental is weak, but maybe at the same time, demand and supply and the sentiment forces are pushing for the dollar valuation to go up. Then it's a fight between all these forces. Okay, so I hope that's clear. Okay, and you need to understand in any instrument. Okay, so of course today we are talking specifically on the dollar, but I want you to know that any instruments that you're looking at, whether is it gold, silver, natural gas, for example, oil, okay, there's always more than one factor being in play. Okay, because I always get asked a lot of times where traders come and say that how come this news looks bearish but the price rally? Okay, so I want you to know that when you are asking those questions, you are perhaps having a very binary view of the cause and effect. Okay, so you need to switch that perspective a little bit. Okay, to give yourself a kind of holistic understanding. Okay, and today I want to introduce to you this principles that's very closely tied to the dollar. Okay, and we call this the dollar smile. Okay, so of course it's not invented by me, right? You can do a very simple search to understand a little bit more in depth as to what this concept and principle of the dollar smile is. Okay, but for today I'll do it a very simplified version. Okay, so this is really what we call the dollar smile. Okay, and as the drawing suggests, it looks like a smiley face, right? And there are 3 points over here. Okay, and the idea here is that the dollar, the US dollar, right, tends to be strong at this two end of extreme, and the dollar tends to be a little bit weak during this period here. Okay, and what are these two extremes here is when the global economy is very weak, okay, or the global economy is very strong. Okay, so when the economy is weak or very strong, when they are at the extreme zone, the dollar tends to be strong in nature. Okay, this is really because of multiple factors affecting it as well. And at the same time, if let's say the global economy is just sluggish, okay, what it means is that it's not going anywhere, you know, it's really not very strong yet, not very weak, it's just like, nah, okay, then the dollar tends to weaken. Okay, but of course, this is not the only factor again, because this is based on multiple factors affecting the dollar, and this is the tendency of it happening. Okay, and of course, over here, I want to introduce you, since we are talking about elections, right, and what is going to affect how is that going to affect the dollar? Okay, I want to introduce you to this term here called seasonality as well. Okay, so you can see there are so many factors affecting the price movement of the dollar. Okay, so again, open your perspective. But at the same time, when you're trading, of course, you need to be clear which are the stronger weightage that you put so that you can make that decision, okay? Because if today you say that, this is all mixed, I'm not going to do anything, okay? I can share with you there's not likely be a time where everything aligns. Very unlikely, okay? So as a trader, you also need to know like which one do you give more emphasis on. Okay, so over here, this is again just a quick one to share with you. Generally, there are these three big categories that affects the dollar. One is, of course, we talk about macro liquidity, right? So this one touches on fundamental as well, whether the Fed is increasing rate, lowering rate, printing money, or tightening, okay? That will directly affect the macro liquidity as well because it injects supply and demand into the market. Okay, sentiment, of course, we talk about risk environment. Okay, just now I give you an illustration when you are in a panic mode and you need to run, most people will still grab the US dollar, okay? And of course, if let's say we are in a very calm mode and people are greedy, where would they put their money at? Okay, so over here, we also have this term here called money flow. Okay, so you might also want to go and Google and understand a little bit on this concept here called money flow, right? How money flows from one asset to another. And if you're taking a look at the financial market as a whole, okay, each individual asset is actually competing for funds. Okay, in other words, if I simplify this whole understanding here, if today you only have two options, stocks and cash, okay, cash itself is a position as well, right? Stock and cash, okay. So the idea here is these two assets are always competing for funds, okay. So today, if you think that cash is gonna be the one that is gonna increase in value, or vice versa, relative to stock is gonna drop, then what will you do? You put your money in terms of cash position, okay? So cash is actually competing with stocks for your funds, okay? Or you can look at it as it's competing for attention. Now, if relatively you believe that stocks is gonna rally more than your cash position and you put your cash in cash, it's not gonna do anything, then what will you do? You put your money, invest into the stock, right? So relatively, what are they doing? They are competing for your attention, they are competing for your funds. Okay, so that's the idea of money flow, right? So in a financial world, it's always different assets competing for attention, competing for funds, okay? So you need to understand that concept as well. And of course, the last one here is talking about demand and supply, right? Demand, basically, how many people globally, what is the demand for the US dollar? And of course, supply here, how many US dollar is currently in the flow in the economy? Okay, so that also links back to the monetary policy, fiscal policy, etc. Okay, so this is a quick summary. Okay, but now let's take a look at also the seasonality factor, okay? Because the idea here, a quick one about seasonality is we are looking at historical pattern, okay? And what are some of the repeatable, reliable patterns that tends to repeat over itself for the past numerous years, okay? So there are certain patterns of it, okay? And I want to share with you some significant ones, okay, with respect to the US dollar. So you might either use this to add into your own analysis toolkit. You can add in as part of filtering. You can add in as part of your helping you in your trading or investment decision as well, okay. But I want you to know that this is not 100%, okay. These are based on statistics, and this statistics tends to have a certain reliability factor, certain accuracy, okay. Now, to give you the perspective over here is that the election in US always happen for 4 years once, okay? So we do have what we call the election cycle. So the first year, where we are right now in 2020 is what we call the election year. Next year in 2021 is what we call post-election year. Okay, 2022 is the midterm election. Of course, we have the pre-election in 2023. Okay, and then the 2024, the cycle repeats, right? Every 4 years, the cycle repeats. Okay, so based on this specific cycle of each year, what we have identified is there are certain patterns that tends to occur in the US dollar itself. Okay, so if you take a look at the most recent one that we are in right now during this period is somewhere around 4th of November, which is where the election happened, to the end of this year, 2020. Okay, there is a probability of 6 times the dollar is going to rally and 6 times the dollar actually drop. Okay, so what does this mean is that for the past 12 election year, okay, so past 12 cycle of president, 6 times the dollar rally during this period and 6 times the dollar drop during this period. So if you take a look at the statistics and the reliability factor of this, it's about 50-50. Okay, half of the time the dollar tends to drop, half the time the dollar tends to rally. So as a trader, you know that if it's 50-50, you do not have an edge. Okay, you do not have a probability, right? It's as equal to like flipping a coin. So with this, you might come to a conclusion and say that, okay, it's not clear. There's no clear direction for me based on seasonality, based on probability. So maybe I don't want to focus my trade on the dollar during this period. Okay, so that's an example of how you can use it. Now, next year is called the post-election. Okay, so from 1st January to end of February. So for the first 2 months in post-election year, which is 2021, okay, there is a 10 times probability in the history, okay, based on this period here, that the dollar rally, okay, and 2 times it actually dropped. Okay, but of course, again, right, I want you to recall back, we talked about this. There are many factors affecting the price of the dollar, and right now we are talking about seasonality patterns, okay? And of course, in terms of seasonality here, you can also consider like some of the factors are also interlinked. All right, but I want you to understand this perspective. So the idea here is there's a very high possibility or probability that next year during Jan to Feb, there's huge probability that the dollar is going to strengthen during the start of the year. Okay, in July and September though, okay, in 2021, you realize that the probability swing towards the dollar tends to weaken. Okay, because in July 2021, that month, okay, there is a 9 times historically that the dollar fell versus 3 times it rallied. Okay, so the probability lies towards dropping, and of course in September, the month of September as well. Okay, now some months are not here simply because the probability is just probably close to 50-50, right? And it's not worth bringing it up. Okay, so over here, what are some of the months that I brought up? Months that are significant enough in terms of either side is very high in the probability factor. Okay, now when we move forward a little bit towards midterm election, that's the year of 2022, then April and December are the months that you want to take note of, because in April and December, that's where the dollar tends to see it weakening. Okay, so you tend to realize that after, post-election year, starting from July, which is the second half of next year, all the way towards, the third year, midterm, 2022, it seems like the dollar has a tendency of weakening, right? So the idea here again, you can actually use this to trade a certain pair of currency. You can use it to position yourself in terms of investment. You can also use this in terms of position yourself in hedging, okay, in terms of like putting your money away from the US dollar, maybe put it into some asset, for example. Okay, and if you take a look at the pre-election, which is the year of 2023, before the next cycle of election, September to end of October, that means that 2 months, again, the dollar tends to weaken. Okay, and during December, there's also that period where the dollar tends to weaken more often. Okay, so I hope, again, this year is some statistics based on seasonality. Okay, based on this, to give you an idea as to how the election cycle based on historical pattern can affect the US dollar. Of course, you also need to consider the economy. Are we in a recession? What are the central bank doing? You need to consider macro liquidity. Is the current macro environment supportive of the dollar or not? You need to understand sentiment during this current environment. Are we in risk on, risk off? Are we in greed? Are we in fear? And of course, you also need to consider a little bit on the demand and supply and things like that. Okay, again, multi-pronged, and go and study a little bit about the dollar smart. Okay, so I hope this particular video here gives you some different insights and perhaps, okay, a better understanding of what the dollar is. What are some of the factors that can affect it, and giving you that different perspective of how you should be viewing the entire financial market. Okay, so I hope you benefit from this video. If it does, do subscribe to the channel. Do like this video if you can. Okay, I would appreciate you can drop a comment below as well, telling me what is the one thing that you learned or benefited the most from this particular video here, and also let me know if there's any particular content you would like to hear from me more often. With that, I'm gonna see you in the next video.